So, assalamu alaikum, everyone. Good evening or good morning, wherever you may be. My name is Mariya Ilyas. I am the Professional Development Director for Muslim Americans in Public Service. Thank you so much for joining us tonight. Today, we'll be having a very special session and a very important topic on finances and money. And it's titled Let's Talk Money, How to Take Care of Our Finances and Investments for Public Servants. So we appreciate you being here. Our guest speaker for tonight is Acquania Escarne. She was a former Foreign Service officer like myself, and she now is an investments expert. She owns her own company called The Purpose of Money. She's very passionate about helping and empowering other people about organizing and building financial wealth. She also is into real estate. So she'll touch on a variety of different topics today that we hope that you will find useful for yourselves. And she also does consultations as well, which she'll be happy to tell you more about. So with that, I will pass it on over to her to share a bit more about her background, what she does, and a PowerPoint presentation targeted specifically for our audience. So over to you.
Absolutely. All right, guys. So I'm going to share my screen. We're going to talk about money, and I'll be happy to take some questions while presenting, if it's okay with you guys. And if it's something I know that I'm going to cover in my presentation, then I may also let you know that and defer the question until we get to it. But because I don't know where everyone is in their financial journey, I do have some information that will be basic and for those who are kind of just starting out. And then I have some information that's more in detail for those who may be a little more advanced. But I'm happy to share my journey and the ways in which I can help you directly if you would like to talk more after this. So what I'm going to do is shrink this screen so it takes up less space. And then if there's anything in the chat that I need to see, you can take yourself off mute or give me a heads up because I may not see it. I do want to just say a disclaimer that I'm not your personal investment advisor. I'm not giving you specific investment advice. This is really for educational purposes only and informational and meant to help inform you on how you can think about your own decisions. But if you decide to take any action, please consult your personal financial advisor, CPA, attorney, or other professional you need to clarify the guidance. My name is Acquania Escarne. I love to talk about money. I am a wealth strategist and a life insurance producer, and I've helped my clients build wealth through saving, investing, and investing in real estate. At our firm, we do comprehensive financial planning. So we do help address the full person and what are your total goals, values, and dreams, and how can we create a plan that will supplement that. So I have had clients in the past get out of student loan debt or get it forgiven because of their service. I've also helped people invest in hotels like I do. But my interest and passion for financial literacy actually goes back to high school. This is me as a child, and these are my two parents. I'm an only child, and I am my parents' only child. So my dad is a military veteran, did 22 years in the Army, and my mom is also ex-Army, but was an entrepreneur most of my life. So the two of them raised me to become a money-savvy entrepreneur, who at 16, my dad gave me a book called Rich Dad, Poor Dad by Robert Kiyosaki, which some of you may have heard of. And I read that book and I fell in love with the idea of not working forever.
Hey, everyone, if we can please ask you to mute your phones if you're not speaking. Thank you.
Yeah, leveraging my money to make more money when it was best for my family. So I've been saving for retirement since 16.
Wait, you went on mute.
Okay, now I'm unmuted. Okay, so I started saving for retirement at 16 years old after reading that book, and I have been building ever since. through really slow and sexy, not so sexy sometimes strategies, but the slow and easy route. I'm a mom. I am a wife. I'm happily married to this handsome man. We've been married over 16 years, and we have two beautiful sons. I am a mom of a special needs kiddo and a typical kid who is like 13 going on 30. I'm an avid traveler, come from the foreign service, but traveling has always been in my heart. I took my first international trip in 7th grade to Spain, and I decided I wanted to travel for the rest of my life. And as we talked about, I'm a real estate investor. I primarily do commercial real estate now, hotels, apartments, syndications, and rentals. But I have done the landlord thing with properties that I own one-on-one, and can speak to that as well. But one of my favorite things is me and desserts. I do have an addiction to sugar, but it is one that I do moderately, right? I try to do everything in moderation, but I do like to eat dessert before dinner. And today we're going to focus on a couple of things. And again, we're going to go through different levels of finances. So we are going to talk about savings, why you need it, why does it matter, budgeting, maximizing retirement and Social Security, taxes, as well as benefits too. So I'm going to check the chat just to make sure I didn't miss any questions. Yes, thank you so much for support. Yes. I'll be happy to share. I think she said the recording will be available afterwards on the website. So you
That's
guys
correct.
are welcome to take notes, screenshots, and tag the Purpose of Money on Instagram afterwards. And if you do share it, I will share it in my story if that's okay. So remember to take the screenshots and tag the Purpose of Money. All right, so let's start with savings. I just want to kind of see who am I working with in the room. If you can drop in the chat, did you set a savings goal for this year? Drop yes in the chat if you did. Drop no if you didn't, and no judgment if you didn't. I just want to get an understanding of how many people set a savings goal for yourself. Yes, we have some yeses. Yay. So that's really good. I'm an avid saver. I think it's important to be prepared for emergencies and when life happens. I love that answer, sort of. But let's talk about what savings goals look like and how you can do it in 2024. So the first thing is, before you can hit any goal, you have to create a metrics to measure it. And so I definitely want to make sure that we are setting goals. Okay, so set goals that you want and are willing to meet, right? And then let's break them down into things that you can achieve. So for someone who is struggling to save or not quite sure they have enough extra to save, one of the fun ways to say that I like is the 52-week savings challenge, because you get to save literally $1 more than you did the previous week, and the most you'll ever have to put aside is $52 in 1 week. This is for a beginner saver or someone who wants to save with kids, because it's a fun way to save together. And it's achievable for most people, right? Saving $1, $2, $3, and so forth is something you should consider trying. And it gets kids motivated to save. But if you want to hit the bigger numbers, if you're trying to hit a down payment on a house in DC, which can sometimes be in the upper 5 and 6 figures, you're going to need to save more. So I like to provide this kind of cheat sheet on what that looks like financially if you're trying to save 10, 25, 50, or even $100,000 in 1 year. And this is something that I think you first have to, we'll talk about budgeting as well and how you make sure you're allocating money for these savings. But first, try to figure out what's the total, why are you saving, what's your goal, what is it that you're interested in doing, and why. Okay. One quick tip I want to give everybody is I am an auto saver. So if you put your savings on autopilot, then you're more likely to do it. You won't have to remind yourself to do it. You won't have to manually do it. You just have it come out of your paycheck and into your savings automatically. And so with the government, one thing that I like is you can create multiple accounts that money is deposited into, and you can allocate one of those accounts to be designated for savings, and you could save every single paycheck. So that's something that I actually encourage people to do to make saving a habit. And you can use your savings for emergencies, vacations, or things that you want. Great places to save. I did do a couple of researches to look up Islamic banks that are in the United States, but obviously, if you're really concerned about the interest, you may want to donate it. But there's definitely, for my clients who are a little more flexible, high yield savings accounts are really popular right now because of their ability to help you save. And earn more. But if that's not aligned with you and your beliefs, then definitely encourage you to save in a space that does. And here are a couple that I found that are operating in the US, but of course it depends on where you are. And then definitely do your due diligence and research to see if these are even banks you still want to work with, because I know every bank has different standards and rules and benefits that they provide their customers. But definitely set a savings goal, try to break it down per paycheck, and make it something that you can definitely do per paycheck so you can make sure it doesn't get skipped. One of the things I recommend is that we incorporate savings into our budget. And so now we're going to talk about different ways to budget. And so please let me know how many people here have a budget. If you have a budget, say got it. If you don't have a budget, say no. I just want to know how many people actually budget. And budget, I prefer it's a more formal way where you're actually looking at your expenses and what you make. But if you are someone who just checks the checking account before you make an expense, that's not actually a budget. But we can talk about different ways that you can set yourself up for success and budget in a way that works for you. Okay, good. So we do have some people who have it, and then Billy said no, not so much, but that is okay. Let's talk about it. All right, so I have three main ways to budget that I tend to talk about with clients. And that's because these are the ones that people have been able to find that fits them, their personality, because budget is not a bad word. You really just have to find the budget that works for you. So we're going to talk about zero-based budgeting, 50, 30, 20% budget, and then a budgeting with multiple bank accounts, which is my personal fave and one that I use. So definitely let me know in the chat if you use any of these types of budgets. And then let's talk about it. So for those who don't know, zero-based budgeting is when you are giving every dollar that you make a purpose, and then you're sweeping leftover money into your savings, designating it for investments or paying down debt. Giving every dollar a purpose specifically means if you get $2,000 a paycheck, you allocate all $2,000 to something, whether it's your housing expense, your food, your shopping, or your health insurance, whatever it is, you make sure 100% of that money is spent on paper. And then you actually look at your expenses that month and see how much money you spent in each category and how much of it you didn't. If you had any extra, meaning you didn't have to pay a utility bill or you didn't spend as much on shopping, then you take the extra and you put it towards somewhere else in your budget. But a zero-based budget also means if you have to spend more in one area, like on car repairs, then you have to take money from somewhere else to make up for it. You are literally spending 100% of what you make and nothing more. You're not overspending. So that requires you to really be clear about what your expenses are. And it also requires you to make adjustments. Most people tell me they hate budgeting because it's too constraining, but actually when you budget properly, it gives you the power to control your dollars and know where your dollars are going. And with zero-based budgeting, 1 month does not have to be identical to the next one. I actually recommend you build your budget the month before it happens or before the paycheck comes, but adjust it based on what's happening that month. So if you have a birthday, if you have a trip, If you have expenses that you normally don't have, but you need to allocate money towards them, that's when you would make adjustments to your budget and put money into your trip budget and take some money out of your shopping budget so that you still end up spending every dollar on paper, but you reallocate for the expenses you actually have. So that's how zero-based budgeting can give you some flexibility. I've had clients who have utilized zero-based budgeting to get out of $1 million in debt. Between student loans and home debt, they had so much, they had to stick to a budget to get out of it faster. So it can work for you if you use it right. Another way to budget is the 50-30-20 budget. So this is kind of giving yourself buckets of money that you can put towards your expenses, but it's not so strict that you have to account for every single dollar and can't spend over that amount in a category, right? So unlike the zero-based budget, this just says take 50% of what you make and put it towards your essentials. So that's your housing, that's your health insurance, that might be car insurance, life insurance, etc. But the 30% will go towards your desires, your wants, your fun stuff. That could be going out with your friends to dinner. That could be going to the movies. And then 20% is going to go towards your savings and then any debt you may have, your like student loan debt, for example, not a mortgage. Mortgage would be under essentials or needs. But essentially, this is for someone who likes the flexibility to be able to adjust what they're spending in each category and just knowing not to go over that amount. So if you have $1,000 towards needs and $500 towards wants and $500 towards savings and debt in our $2,000 a paycheck scenario, that is how you would break it up. Or not exactly the 20-30. I didn't do the math the same, but you would break it up 50-30-20, and then you would allocate the money accordingly. So the reason I like this is because some people just like to know, hey, I have $1,000 to spend towards needs, and once I've spent it, I'm gonna stay home, right? Or I'm not going to put any more money towards other things because I have spent my budget for needs. And the same goes for wants. They kind of cap themselves at whatever the 30% is, and then that's the most they can do. And then the rest is covered in the 20%. So that would still include your savings. It would include if you're, paying credit cards in full every month, that would be in the debt pile. Also college funds for kids, or anything else that you're saving for would come out of that last 20%. All right. So one quick tip when it comes to needs versus wants, and I recommend this even if you're somebody who's solo and you're managing your own finances, or you're in a partnership, a marriage, is that I definitely think you need to write down your wants versus your needs. And I know some people are like, why isn't it obvious what's important versus what's optional or what's desired? And the answer is no, not all the time. Because for some couples, or depending on your career or your hobbies or what's important to you, your needs and wants might actually vary based on your needs, your hobbies, and your desires. So I definitely encourage you to write a list of what you consider to be a want, a need, so that when the need to spend money for that item comes up, if your partner agrees, or doesn't agree, you can easily resolve the disagreement by looking at the list that you create together when there are no issues. It also helps you to be less of a reactionary spender or a spontaneous spender, because you'll look at your list and say, actually, I don't need these shoes right now because I just bought shoes last month. But if I have extra money at the end of the month, maybe I will get them for myself if I successfully pay off X credit card, right? So you can use your list as motivation. You can use your list as a guide. You can also use your list to keep you in bounds with what you committed to do for yourself or in your partnership, right? It also is important to kind of designate these things ahead of time. I hate for you to be in the midst of it and trying to be figuring it out at the same time. So it's always better to outline the rules before you start to play the game, right? But set goals for all of these things. so that you can reach those goals and also make sure that it works with the money that you have coming in. But I personally treat saving and investing like a bill, so I include them in my budget so that they are done every single month. And for me, investing could be my brokerage account, outside of my retirement savings. It also could be saving for my next hotel or rental property. So those are just different ways to make sure you're building every day you can. And then next up is my favorite way to budget. As I mentioned, this is how I've been budgeting for years, because this is also not as strict as zero-based budgeting way to control your finances. And that is budgeting with multiple bank accounts. So basically funding different bank accounts to cover your expenses, and doing it based on what your actual expenses are. So even if you're going to budget with multiple bank accounts, you still need clear visibility on what your bills are and an understanding of what you need to live month to month so that you can allocate, the right amount to each account. Okay. So tell me in the chat, has anyone ever budgeted with multiple bank accounts? Does anyone budget with multiple bank accounts now or has done it in the past? I'm going to give you a visual to show you what this means. But I want to just kind of set the room, see what people are working with. So we might have somebody, yes, in the past, no. Okay, got it. All right. So for me, when you're budgeting with multiple bank accounts, you do allocate one account that receives all the income. So my husband and I put our money into a checking account, and then we will have money go from our checking account to these other savings accounts, actually, or other bank accounts that we've allocated for specific things. So fun money is the things that we like to do for fun. Because we travel a lot, we do save for vacations every time we get paid. Investments are also contributed to every time we get paid. And then your fixed expenses, for me, it's like my mortgage. My mortgage is not going to change for about 30 years. So I allocate money into this account for the mortgage. But variable expenses are things that do change. So that could be utility bills because those can fluctuate. And those are what we're putting away to just kind of give us a bucket. But what we do to make sure we put enough money into this account is we create an average of what we spend for variable expenses. So if my gas bill is about $50 every month, then I will put $50 a month into the variable expense account, and then build a cushion in that account. So the months that it's $30, then there's an extra 20 in the account that will be there in the event one month the bill is higher than $50. Okay. So emergency fund is essential for almost every household. I don't know anyone who has told me they didn't benefit from saving for a life expense they weren't expecting. So I also think it's important to save for emergencies because you never know, you can have a change in your income, you can have an unexpected car accident, medical expense, and you want to make sure you have money to cover it so you don't have to use credit cards or go into debt to pay for it. So if you can save for your emergencies every time you get paid, and your goal for an emergency fund should be 3 to 6 months of your monthly expenses, but start at 1 month, okay? So if you normally need $5,000 a month to live or $10,000 a month to live, your first goal for your emergency fund should be to save that $5,000 to $10,000 in an account that you can easily access. So your emergency fund should be an account you can preferably access either via ATM or online and get access to the money within 24 to 48 hours if you needed it, because you want to be able to have it for an actual emergency. Okay, so does that make sense, everybody? I'm using one account to receive all the funds, and then I transfer money to the separate accounts to cover the pockets of bills. And then I make sure they get paid. So the one thing you need to make sure when you're budgeting with multiple bank accounts is that you set up the payments to come from those individual bank accounts that are designed to cover those expenses. So my mortgage comes from one account specifically, and it is designed to do that. My investments come from another, et cetera, until everything is paid. And I just have to visually go in and make sure everything got paid and every transfer I set up was made. So just check the transfers just in case. I like to put bills on.
Question,
Yes.
question. So, do you recommend the auto pay system? Because sometimes companies, it gets people to be in the habit of not actually checking their bill, but then that's a sneaky way sometimes companies kind of, add in extra expenses. What are your
So
recommendations on
here,
that?
that's a timely question. I'm answering it right now. So put your bills on auto pay so you don't forget to pay them. Because your credit, if you do need it to do certain things in life, it will be based on credit history and your timeliness of paying bills. However, I do have a caveat to this. There is one thing I never put on auto pay, and I encourage you to consider my advice, please. And that's utility bills. And the reason I don't put utility bills on auto pay is exactly to what you were saying. You want to check it and make sure it's accurate, and you want to make sure you weren't overcharged or complying to agree with a bill you're not responsible for. So I check my utility bills because any spike in a utility bill can normally be a sign of a problem or a change in usage that you need to watch. So for example, my water bill skyrockets in the summer when we are running the sprinklers and watering the grass. That makes sense to me. But if my water bill spikes in the winter when we are not watering the grass, I need to ask why. I need to know, is it a broken leaky pipe? Is it a misreading of the meter or some other factor that has led to this incorrect bill? And if I had it on auto pay, once you make that payment, you're kind of agreeing to that bill, and it's very hard to dispute utility bills after you've paid it or committed to the payment. So always check utility bills every month, make sure they're accurate before paying them, and definitely pay attention to spikes so you know if something is wrong. But everything else I do. So this is why do I do that? But everything else I do kind of set and forget, especially if it is a fixed expense like my mortgage that's not going to change for 30 years. So if you know, hey, this bill isn't going to change, it is always, $2,100 a month or $500 a month. That kind of stuff, as long as you're budgeted and prepared for it, you should be able to pay on auto pay. If you're still a bit nervous about auto pay because you just don't want the companies to have access to your bank account or your funds, another option is to set an alarm or calendar reminders on your calendar about 3 days before bills are due, and you can manually pay your bills, but the reminders will make sure you pay them early instead of late. So I use that as a backup to remind me about certain expenses. You can also sign up for notifications and alerts from your companies and your bill collectors so that you can get notified in advance before payments are due. So that's another way, okay? All right. So how many people here are actively saving for retirement? Or how many people are not even thinking about it at all? I guess put in the chat. Are you saving for retirement, or are you not thinking about it at all? I'm just curious. I know sometimes I wish I didn't have to think about it. That's good. That's good. All right. So I'm going to actually kind of give you two perspectives because um, depending on your perspective, in regards to your beliefs, you may or may not agree with the savings plan, right? So if you agree with the TSP and all it has to offer, push yourself to max it out. But if you prefer to save outside of the TSP, you can also push yourself to save outside of work. And I'm going to present this because I just don't know where people fall on this. I have had colleagues, Muslim colleagues, who are adamant not to save in the TSP because they just don't understand all of the investments. But then I have others who do save in it. So let's talk about that. But give me 1 second. I hear something and I need to check on it. Okay. Thank you. All right, so TSP, okay, yes. Oh, so sorry. Okay, so the thrift savings plan is the program that's equivalent to a 401k for government employees. Some people are maxing it out, some people will choose not to, depending on your beliefs. So if you do not max it out, or at least do 5%, you will not qualify for the match. So I've had some clients who have chosen to do nothing. They just sign up. You get 1% automatically if you're a government employee, and the government will give that to you no matter what. If you save at least 5%, then you will get a free or matching 5% from the government. If you're not doing the 5%, you'll only get the 1%. So that's how the TSP works. And I'm actually going to show you some more information on the TSP for those who have it, so you can at least understand what the TSP offers. But if you choose to skip the TSP or your job's 401k, for those who don't have access to a thrift savings plan, but you do have access to a retirement account, a 401k, then you have the option to use it or maximize personal investments outside of your job. Okay, so those are your two options. So if you do your research and you find funds that you can invest in with your 401k or your TSP, definitely invest the max. And the reason I say that is because the IRS gives you a huge tax deduction when you do pre-tax contributions to these accounts. The IRS raised the 2024 contribution limit to $23,000 a year. So for anyone who's putting in contributions to your 401k, contributions to your thrift savings plan, before you get paid, before the taxes come out, then you get to lower your tax rate or taxable income by dollar for dollar, 23,000. And so that can come out to $884 every 2 weeks if you're on a biweekly pay schedule. But if you don't want to do the 401k or TSP in your job, then your options to invest are lower and your limits are also lower. So I encourage people to do what they're comfortable with and max out to that amount, if that makes sense. So for those who are with the government and you're with the thrift savings plan, you probably are familiar with life cycle funds. Okay, that's a good question. Adele, I'll answer that question. So you'll have what we call life cycle funds. Life cycle funds are kind of structured for you to adjust on your behalf, and they're kind of set to on target dates or years that you either may be retiring or based on how aggressive you want to be in your investment strategy. So, for example, a L income fund is for someone who's putting their money all into an account that they plan to draw from that year. So this is for someone who's retiring in this current year. The L25 is for someone who might be retiring in 2025. And then L2065 is someone who has a long horizon for working and is potentially not going to retire for quite some time. So this is the most aggressive option. This is the least aggressive option, okay? But these are the life cycle funds in the TSP. And then there's also 5 individual funds in the thrift savings plan. The G fund is the most conservative. It's the equivalent of cash. It is very not risky, but also has not always kept up with inflation. So just be careful because some people have lost money leaving it in the G fund and the F fund. And then the F fund is a fixed income index, so it is conservative as well. It's not one of my favorite funds, but it is there. The other 3 that you can do on individual basis in the thrift savings plan is the C fund, S fund, and CSI, just like the TV show. They kind of have a combination of large, small, and international companies. So the C fund is the largest one with the big companies that are similar to the S&P 500 index. That's what it tends to follow. And then the S fund is small cap stock companies. So they're smaller companies now. They're still $1 million companies, but they're the ones that I would call like the Apple in the 1980s. They're the ones that you want to get into before they skyrocket into their peak performance. So they have potential for growth. And then the I stands for international, and the TSP is actually more diversified than some private sector 401ks by offering almost 40 countries in the I fund, which is very, very impressive. But you have to just understand this is international focus. And the reason I recommend it is because when the US markets are down, you want to have some input into international markets. So that's why we do CSI, so you have a balance. I did go ahead and share my TSP mix for anyone who's interested. This is what I do, and then I adjust it accordingly because this is where I see the most growth. Okay, great. I don't personally do the life cycle funds just because they do have the 5 individual funds inside of them. And so it's sort of like having individual stock in Coca-Cola and then having Coca-Cola and everything else in your portfolio too, kind of like having it in 2 places. So a lot of times I will just encourage people to stick with the individual funds that work best for them. I do CSI. And then potentially not include life cycle funds because they tend to adjust not in alignment with most people's risk tolerance. The other issue is the G fund and the F fund tend to slow down the performance of your portfolio. So that's something to think about. But to each his own, I did want to make sure you understood what the 5 options were and how they work. Okay. So that's why I stick to this. But this is a really good question. What tax advantage accounts are available aside from the TSP, 401k, traditional Roth IRA, and HSA? So that's actually the gamut of them. But we will talk about another option, which is life insurance that can be beneficial. It's not tax advantage, but there are life insurance policies that you can consider, and they do provide tax-free income to your family or yourself. But you named them, the TSP 457Bs and 403Bs, and all those accounts are out there to help you save for retirement. It's tax advantage when the taxes are not taken out now and taxed when you withdraw them. They're tax-free investment vehicles like a Roth when you take the taxes and you pay it now and then you don't pay them later. And then the health savings account, or HSA, I'm actually going to talk about. So we'll talk about that now. Oh, and you left out dependent care. So I definitely will talk about dependent care. But before I move on from the TSP, I wanted to just kind of highlight one of the newest features that the Thrift Savings Plan offers, which is the mutual fund window. This is for those who want to invest in specific funds outside of the 5 funds we talked about, the G fund, F fund, C, S, and I, and the life cycle funds. They recently added this mutual fund option. But if you pursue the mutual fund option in the TSP, you do have to do 10,000 or more to get into this. And then you cannot do more than, I think, 25% of your total account balance. So just know that they kind of set up these limitations to make sure people don't risk it all per se, or do too many risky movements. So just know you can't do more than 25% of your total balance, which means that normally you have to have at least 40,000 in the account before you can even do the minimum 10,000 to start a mutual fund. If you do the TSP mutual funds, there are fees involved. But again, the TSP is one of the lowest fee options out there, and their goal is to just cover their expenses. They are not really trying to make money. So they have annual fees and then fees per trade. So if you are going to be someone who tries to manage your own TSP mutual funds, just know every time you trade, there is a fee for that. So make sure you understand that and choose to do so wisely. All right, so Abdul, I'm actually going to cover the health savings after this. Do you still get a TSP match up to I think it's, I'm trying, let me just check this so this can go away. Up to 5% if you exercise the mutual fund option. Yes. So with the TSP, the good thing is the government doesn't really care where your 5% goes as long as you do 5%. You can put your 5% into the Roth TSP option, into the traditional TSP option, into one of the life cycle funds, into the mutual funds, or even into the individual funds. As long as you put 5% into that account, they will match it. But always remember, the government is always, always, always going to put their match in the traditional TSP account. And I will give a cookie to who can tell me why is that? Does anybody know why the government will never put their matching funds into the Roth option or a non-taxable option? Does anybody know? It's a little interesting, but why do you think the match will always, always, always go into a taxable part of the account? Well, that's why, okay? Yes. Well, no, it's not that Billy says they don't want you to gain. No, actually, the answer is they want to get some of their money back in government tax revenue in the future, right? So they're saying, please give us 5% and we'll match it. But then we're going to put it in a bucket of money that is taxable in the future. So you will return some of it back to the economy. So it is a little bit of selfish gains there, but that is how it works. And that is why they do it, so that you will return some money back into the economy. Yes, traditional is taxable in the future. Roth is taxable now. Yes. So here's a quick question. How many of you have logged into the Social Security website and looked at your Social Security statement? Has anyone ever done this? They used to mail these out to you in your homes every year, and then they said, nope, we're not doing that anymore. And now the only way to access it is online. Okay, this is good. I'm seeing some yeses. A lot of people don't do this, and they assume that they shouldn't even care until it's time to retire. But I'm here to tell you, no, you need to care, and you need to care before retirement so you can make sure that your statement is correct. Yes, at 40. Yes, yes. Murad, you need to log in. So if you go to the Social Security website, and sometimes you'll have to verify your identity, put in some information, tell them an address you used to use so they can prove that you are who you say you are. But then they'll give you access to your statement. Your statement will look like this. It has your name and the date at the top. It'll also have your birthday, and whether or not you qualify for a benefit yet. If you haven't worked long enough, it will say you have 10 out of 40 credits. Keep working and you'll eventually earn a benefit. But if you have worked at least 10 years and you've earned a benefit, then you will see here your date of birth and that you are qualified for a benefit between 62 and 70. Remember this, guys, though, I always tell people 62 we won't do, because 62, if you claim Social Security at 62, you lock yourself into the lowest benefit possible. And we don't want to do that. So 70 is the max benefit where you actually can get the most of your money that you've earned back. And then 67 is the age that most of our generation can qualify for a benefit starting at 67. So just know that the benefit is permanently higher if you wait till 70, and this is money you put into the system and you deserve to get back. But Social Security is not just about retirement, it also includes disability benefits. So God forbid you are disabled and totally disabled and unable to work, you will qualify for a disability benefit. And God forbid if you pass away and you still have a minor child, your minor child will receive a benefit until age 18, and a surviving spouse will also receive one in full retirement, if they were banking on your retirement income to help them survive. And then there's also a one-time benefit of $255 that goes to your family after your death as well, because those are survivor benefits. And then last but not least, Social Security will also cover Medicare. So when you get older, all of us are required at 65 and up to contribute to Medicare or medical expenses. And Social Security kind of pays that out too. So just know that that's something we can't really get out of, but it is there, and Social Security serves more than just the retirement purpose. So you want to make sure you're checking your statement every year, because like I said, this is the lowest, this is the highest, and then this is normally in the middle, but the earliest that older generations can do is 65, like my dad could do 65, but younger generations are now not eligible until 67, okay? But 1,500, in this example, this is an average American making $50,000 a year. 1,500 a month is what they would get if they were 67, but 1,860 a month is what they would get if they waited till 70. So sometimes it is worth the wait. If you have saved well outside of your other vehicles, you may not need Social Security, so you can wait, and then you can use that money to donate, to help your grandkids, to help yourself, whatever you want. All right, so let's talk about taxes. Any questions about Social Security? We are almost done. Any questions about Social Security? But check your statement every year, because it is the employee's responsibility, or it's your responsibility to identify errors and report them as soon as possible. And you always have to provide either tax documentation, pay stub, or other information to correct errors. And so you don't want to wait till retirement, like 20 years after you worked a certain job, to try to fight for the salary to be corrected or the information to be updated. So check it once a year, preferably in the spring after all the information has been updated from what they received in December. All right, so we do have lower your taxes now or lower your taxes later. So let's figure out which one is for you. If you want to lower your taxes now, we're going to max out deferred retirement contributions. So that's your TSP, that's your 401k, that's your 403b. We are putting $23,000 a year in that account to maximize lowering our taxes today. So when you max out in pre-tax contributions, you will get a dollar for dollar deduction on your taxable income in the same tax year. Health savings accounts are also a great way to save, because that's money pre-tax going into an account that's designated for medical expenses. And if you're going to incur those expenses anyway, whether you are buying eyeglasses, getting LASIK, going to get massages, why not pay for that with pre-tax money? And the best thing about an HSA or a flex spending account, for those who qualify for that, is this money is not taxed when it's put into these accounts, and it's not taxed when it's reimbursed to you for qualified expenses. So it is never taxed, and you get to enjoy it. And so I use my HSA for massages. I used to use it to get glasses, contact lenses, sunblock, personal hygiene items like tampons, anything you need. Dependent care is also really good for anyone who is going to pay for a nanny, pay for childcare services for their children. If you're going to pay for those things anyway, why not pay for with pre-tax dollars that are not taxed to you when they're reimbursed to you either? So this is a really, really good win-win. And then if you are trying to save for education, it does not have to be your children's, it could be your own. 529 plans, depending on your state, will also lower your taxes, right? So, for example, in the state of Virginia, $4,000 into a 529 plan reduces my Virginia taxes by the same amount. Other states, it's different numbers. Maryland has a deduction limit. So look at what your state offers. If you know that you or someone else is going to be going back to school, this could be a great way to lower your taxes and pay for school, or put money aside for school in advance. All right, so what do we have here? Use your health savings account to lower your taxes. Yes. If you don't use it or have money at the end of the year, will it disappear from the account at the end of the year? So that's a great question. So with health, there's two different things here. Health savings accounts are actually accounts where money can accumulate and it doesn't expire. And you can actually take health savings accounts with you from job to job. So a lot of people will use these to save for medical expenses, even through retirement, because these can roll with you whether you change jobs 100 times or 10 times. A flexible savings account is flexible. It's still pre-tax dollars. However, it does have a limit. You can only roll over $500 in a flexible savings account. And when you do roll it over, you have to spend it by March of the next year. So you need to really make sure when you put money into a flex savings account that you spend it, okay? And do whatever you have to do. Go to the CVS and purchase personal items, sunblock, anything that qualifies. Go get a whole bunch of massages. Do what you need to do. Do not waste this money. So I always tell people, if you're not sure how much you're going to need in either category, start with an estimate or a rough calculation of your co-pays from the previous year and do that much first. Making sure and monitoring what your family is actually going to spend. You could also do it based on what you want to do. So I've had some clients say, I want to get LASIK this year. So that's the year they will max out their health savings or flexible savings accounts. But then the next year they will lower them because they already got the surgery and they don't need as much money in those accounts. But let's try to spend our benefits and take advantage of the tax-free dollars.
Real quick on that note. So for those of you that are not familiar with how the health savings account and some of these other works, is that even while you are getting the tax benefit, it is a little bit more work. So if you're somebody who doesn't save receipts or is not good about, accounting for your finances, um, these types of health savings account, in order for you to be reimbursed, you must provide receipts to claim them. So that's the one additional step that they require you to do, is you'll have a login account set up. You'll have to go into the health savings account and remember to mentally say, oh, I bought a toothpaste or whatever you bought. What I like to do is I like to do all of that shopping that I know I'll get reimbursed for on one receipt and separate it out. So that way the taxes and the actual amounts are clearly marked when you file the receipt. So just remember that just because you're spending it on your credit card doesn't mean that you're automatically getting the money back. You have to then go in and there's an additional kind of a step required.
Yeah, so that'll apply for the personal items you purchase, but the medical claims, as long
Yes.
as you tie it to your medical health insurance provider, those will be reimbursed automatically. I used to love going to the doctor, seeing an explanation of benefits hit my email, and seeing the deposit reimbursement too, right? So if you link it to your health insurance, every time a claim is paid for your health insurance, you will be automatically reimbursed for the co-pays. Sometimes even before you get the bill. That used to happen to me sometimes, and I would be like, why did I get this $500 deposit? And then I would be like, oh, because I owe $500 to the doctor. So just for those who don't know the amounts, you can screenshot this. These are the limits for 2024. And I definitely encourage you, if you have childcare expenses, nanny, definitely do dependent care. The one thing I do also want to mention, health savings and flexible savings, those are medical, so you can actually, in some cases, be advanced this money if it's a health expense that qualifies. But dependent care, you have to have the money saved in a dependent care account before you can get reimbursed for the dependent care expense. So that's just something to keep in mind. And then we talked about 529 varies by state. If you want to lower your taxes later, I recommend you max out Roth individual retirement accounts, because Roths do allow you to pay taxes today and then get money tax-free later. And the good thing about a Roth is, although says retirement in it, it can be a backup emergency account, because once the money's been in the account at least 5 years, or you take it out for a qualified IRS reason, you can take Roth money out before retirement and avoid penalties as long as it's for a qualified IRS expense. So for example, you can use $10,000 from a Roth IRA for your first home's down payment. If you have hardship, to pay for education. You can also take money out of a Roth after it's been in there for 5 years. Because it was after tax contributions, you can take the money at any point. But I encourage you to save if you can, and then you can max out your tax-free retirement contributions, which most cases, this is the Roth option. But for it also could be in life insurance, depending on what type you have. And then the backdoor Roth is a strategy that I encourage you to work with your CPA or tax advisor, but this is where you will pay the taxes on money that's in a traditional IRA or account that now, and then it converts to a Roth. So it's not taxable later, but it depends on your tax bracket, whether or not this makes sense and whether or not you should do it. So definitely work with your professional. But here are the limits for Roth. If you are over the age of 50, you do get to do catch-up contributions. And then we already talked about 23,000 is the max on TSP and Roth 401k. All right, so I do think it's also really important to protect your family in the event that you are unable to provide for them because you are gone. Life insurance will provide for your family in the event of you die too soon. Disability insurance will pay for your expenses up to 60% of your monthly expenses in the event you are sick and injured and unable to work. And proper estate planning will ensure that what happens to your things will be according to your wishes. So definitely look into all of these things to make sure your family's okay. This is just a couple of my clients, some of them in the Foreign Service, who I've helped, some of them outside of the Foreign Service, who we have worked together to build generational wealth for their families, for anywhere from students to those working and also overseas. You can definitely check out my website, thepurposeofmoney.com. I am on Instagram at The Purpose of Money and on Twitter. And then I have a podcast. We are on a break right now, but you can definitely listen to previous seasons where we feature some government employees and those in the private sector. Do we have any questions? Do we have any questions? I'll stay on for questions.
Majid, did you answer Majid's question? If you don't use the money at the end of the year, it'll disappear from the account.
Yeah. We talked about it. So in the health savings account, it can roll over all the way through retirement. But in a flexible spending account, you can only do 500, and then you have to spend that 500 by March of the next year. Yes, let me drop my link so that you guys can chat with me if you want. I do offer a free call to kind of get a chat with me, see how you guys are doing and how I can help. Or if you have a dying question, you're just curious.
Yeah, feel free to unmute your selves. Just raise, just if you have a question, please introduce yourself and then ask your question.
So we'll drop it. So I just dropped the free consultation link in the chat. Feel free to set up an appointment and we can talk further about your specific situations. Definitely feel free to take yourself off mute if you want to ask a question live. I love people who take risks and want to hang out with me.
Quick question. So I know that you talked about like your investment strategy, how you have different streams of passive income and all that. But my question is how do you, I guess, generate that much? Like, did you generate it by saving and budgeting and then got the funds together to do those investments? Or like, how do
That's
I
a great
start that
question.
process?
That's a great question. So this might not seem exciting, but my husband and I, we were very conservative in our youth, where we actually, I want to say we started the year before we got married, where we met with an advisor and figured out what our goals were. And then we started to build wealth together. So we used someone just like me to help us come up with a plan. And we started putting money into investments when we were in our 20s. We also, in the beginning of my government career, I started out doing the 5% and then I maxed that out eventually. Once I realized that we could afford it, we don't have kids. And we also maxed out Roth IRAs early in our marriage because my advisor at the time was like, your husband and you are on like career paths where your income is going to disqualify you for Roth IRA contributions soon. So let's max out. So the first few years of our marriage, we did Roth IRA, traditional investments in the stock market. We got life insurance policies the year before we got married. We contributed to our work employee retirement accounts first at the match amount and then increasing as we could afford to and as we got raises. So we did hit our $1 million in net worth quite early in my government career. And then we let the stuff just grow. We didn't really do a lot of risky investments. I would actually say it was 10 years in until I said, okay, now I can use some of these savings to do more real estate. So after my tour in Dubai, where I served for 3 years with the government, we came back to DC. And in that 3 years, we had our home in Maryland rented. So we were allowing the tenant to pay our mortgage in Maryland. And then we were living rent-free in the government housing in Dubai. So we saved what we would have invested in housing. And when we came back in 2015, we purchased our dream home. We helped my mother-in-law get a home, and we purchased a rental property in Philadelphia. And we used a lot of our savings to do that. But in 1 year, we got 3 properties. And so that's where I started to leverage what we'd saved, do the very simple budget for this, save for this, and don't touch it. And then we leveraged it in 2016 to narrow down on real estate. Now, I will be honest, I didn't like being a landlord in Philadelphia. And after 2 years, we sold that property. And then we took that money and invested it in a first hotel in 2020 when it was on a fire sale because it was COVID. So as you can see, I started out conservative in my plans, but then once we had a good amount of savings and investments under our belt, then we only took a portion of it to do hotel investing and other types of commercial real estate. And so now I still have 1 rental in Maryland, but I'm also invested in multiple hotels, 4, 5, 5. And then apartment syndication. So this apartment in Florida that has like 357 units. But I chose to do syndication. So syndications is when groups of investors come together to pool their money, because the buy-in is a little less expensive, but you still get the reward from helping that project come to life. You get equity and you get a portion of what is made off of the project. And that has been really good for me. It's not until this year where I put my name on a mortgage for a hotel, and that was a very interesting but rewarding process. But that's years after we started with the basics. So I always encourage people to start with saving, investing, utilizing and leveraging your work retirement account, and then you can move on to other things. And even when you move on to other things, only invest a percentage of what you're willing to lose, because those are riskier investments, right? But my real estate has always been backed by an actual real estate property or something that could be sold if I needed to get my money back.
So our expert here mentioned the Foreign Service. Some of you may or may not have attended our Foreign Service panel. So just want to remind folks that on our MAPS website, we do have that recording for those of you that are interested in a career switch. I'm in the Foreign Service myself, and I'm always happy to talk to people about it. I'm very passionate about being a U.S. diplomat abroad. It comes with a lot of financial perks. So one of which is that when you're living overseas, you have free housing, utilities, you pay nothing except internet, and even that policy they're trying to change. So you're living overseas for free, you can travel, all the money that you earn with your salary, you can put directly towards savings or your personal entertainment funds, or if you're smart about it, you have an investment property back here in the DMV area or back in the United States, and you have renters renting it out. But for more information on that, as well as different allowances for going to different countries, for danger pay, etc., that's a lot of free money that you can do a lot more with on the side.
Absolutely. But I do feel even if I didn't go overseas, we would have still saved, invested, maxed out, and then been able to do the strategies. It might have just taken a little longer.
Somebody asked about New York. It says New York folks have a limit of 23,000 and 457 limit separately. Can you speak a little bit about that?
Yeah, so that's not limited to New York. Anybody who has a 457 plan.
What is a
with
457? Can you explain
a
that?
457 is another retirement plan, just like the thrift savings plan or a 401k,
For public
but it
servants?
has, huh?
For public servants or for anyone?
No, like, well, it's mostly tied to nonprofit institutions like hospitals or most people that I know that have them, they work in not-for-profit institutions. But it doesn't necessarily mean the government. It could be pseudo-government, nonprofit, hospitals, nurses. I have a lot of friends. The reason I love the 457 though is because you can put so much money into it, and then you can also access it if need be under certain circumstances before retirement. So if you have access to a 457, rock it, crush it, use it. It is not available to everyone, but it is a great vehicle to save additional money towards retirement. And it can work really well if you are a high income earner and you can afford to put that money aside. But yes, not everybody has access to a 457.
I have a question,
Yes,
Acquania.
ma'am.
Hey, okay. So my situation briefly is I just went on disability retirement because I worked for the post office, and after my second job-related surgery, I was like, that's enough. I had 25 years in and did not really have a really good savings plan, went through divorce, had to buy a house, things like that. So I was just kind of I won't say one paycheck away from being homeless, but I was just getting by. And so now I'm supposed to get what they call a scheduled award for the spinal injury. And so based on some information that I was looking at online and things like that, I may get approximately like $20,000. So my question to you is, what advice would you give me? Like, what should I do with it? Just should I put it in a yield savings yield account? Should I invest in your next hotel project? Because you gotta stay ready so you don't have to get ready.
Get ready, yes.
So right, and I need to come to Lake Charles in November for the Lake Charles investment. So I got in on that, which I was really happy about. With Gina.
Yes.
I don't know if you remember me from LA. Remember we went to get the tacos? So I'm just like trying to figure out what
to do. Yeah. So I'm gonna answer your question, but also broaden it a bit because I don't know all about your specific situation. So if I came into $20,000 tomorrow, this is what I would do. If I am completely debt free, then this is money that I could invest or leverage for some projects that I know I want to do. And when I say invest, that means the brokerage account, stock market. That could mean a real estate down payment, depending on if you want to get into cost, maybe that 20,000 will get you the down payment you need to get into a property. But anything that will help that money make more money for me is where I tend to normally go, because that's what my mind thinks. I want to work smarter, not harder.
Okay.
However, if you come into $20,000 and you have debt, you have credit card debt that is racking up anywhere. Right now, the average rate is 15 to 29% I've seen on some credit cards. Then I would encourage you to pay off some of your debt, because it's costing you money and it's going to cost you more than what it makes in a high yield savings account and most investments. So I would attack your personal debt. The only caveat to that is student loan debt. If you have student loan debt at a very low interest rate, and for me, low interest rate is 1% to 7%, and it's subsidized and potentially at risk to be forgiven because you're a public servant, then I would
not at the post office though.
Okay. Oh yeah. Okay. I would not dump 20K into federal student loans. Now, if they are private student loans at 14% or 7 to 14% interest rate, that might be worth getting that balance taken
it down.
Okay. So if you have no debt, go for investing, go for high yield savings account until you find the right opportunity. If you have debt, look at that debt, see how much it's costing you, and consider putting some of that money towards debt. And then the third option is if you don't have an emergency fund and you were living paycheck to paycheck like 2 weeks ago, then obviously I would put that 20K into savings so you aren't living paycheck to paycheck 2 weeks later, right?
Right.
Because that's an uncomfortable position to be in. The economy is economying right now.
Yeah.
Prices are high. You know, people are finding themselves having to pay more for the same services they need consistently. So those are your options depending on your financial situation.
Okay. Thank you. That was really helpful because, working for the government, I haven't even gotten a check since like April. So I am living off my credit card so that my DTI is going higher and higher and higher. So, okay. Thank you. I
Yeah,
appreciate
you're
the help.
welcome.
Another question that's on go ahead.
Okay, go ahead.
Is about, we talked a lot about real estate. Some people are homeowners, some are not, some are looking to get into the market. This is a classic question, when is a good time to buy? So I know that COVID was a really great time to buy. Those that were able to take advantage of it were able to benefit from the lower interest rates and mortgage rates. Right now, mortgage rates are still hovering. Interest rates are still hovering around 6, 7, 8%. Is now always a better time to buy than tomorrow?
I would say it depends on your situation and what you are prepared to do, because even people buying now, it's still a competitive market. They're willing to pay 6 to 7% interest rates. The inventory is still hard to come by. So depending on where you live, it might still be a difficult market to purchase in because you're competing against so many other people. So I would honestly say, what are you financially prepared to do? If you can afford to purchase now, then go for it, because we don't know what the future will hold. We keep hoping these interest rates are going to drop, but honestly, the interest rates we had post-COVID may not come back for a really long time. And we have had interest rates even higher than what they are now. Because my mom and dad's generation, some people were paying 11, 12% for houses back in the 80s, right? So I would say, what is best for your family? Have you saved for the down payment? And if you purchase a house today, after you purchase it, are you going to be house poor, or are you going to still have savings? What I don't like to see people do is put all their savings into their home, and then the minute the water heater breaks or the paint needs to be redone, they don't have money to do it because they put all the money into the down payment. So just make sure that you have enough money to qualify for the down payment. Look at first-time home buyer programs to see if you can get any opportunities for grants or money towards your down payment. And then also make sure you have money in your savings after you become a homeowner so you can handle all the things that come with home ownership, which includes paying for your repairs and maybe even furnishing it too. But I have a really strong belief that if I have a 30-year mortgage, I have 30 years to furnish my home, I have 30 years to pay for it, and I have 30 years to figure it out. So don't feel pressure to furnish it right away, to paint it right away, and to do all of the things in the inside right after you move in. You can spread that stuff out. Some Ashra says Ashra is painting walls right now. So, like, take your time, but definitely review your finances. But I could tell you, look at the rent in your area and look at the cost of buying and see which one makes the most sense for you. For some people, they will never buy a house. They will always use their extra income to put towards investment saving.
Do you recommend any first-time home buyer programs for those that are looking for?
Yeah, do your research, because they vary by state, and some states will give you more beneficial programs, but they might be income-based. Other states will give it to everyone, but you have to work with a particular bank. So just look at what's available to you, because and look at what banks offer too. So there's national, state-based first-time home buyer programs, but then there are also banks first-time home buyer programs. So like our credit union, State Department Federal Credit Union, offers like cash back at the closing table if you use their services to buy a home, and that applies to all their members, and it has nothing to do with first time. You could be a second, third, fourth home buyer and you get the same benefits. But if you're a resident of DC, they have like NACA and other programs that are open for DC residents, and they'll give you grants that
NACA is actually
national.
nationwide.
NACA is national. But like DC also has grant programs where they'll spread out the grant for like 20 years and then forgive it in the last 10. So it depends on where you're living. And then also look at programs for developing lands or buying property in areas that need development. Because I know some clients in Chicago who've been able to buy significantly discounted real estate with the anticipation to renovate in areas that need to be renovated. Okay. Yes. Any other questions?
All right, folks, if no other questions, we'd like to give time back. We've got about a couple more minutes.
And yes, I'll drop my link one more time.
Oh, go ahead. Somebody's raised their hand. Go ahead.
Yeah, this is Murat Akhmedov. How can you hear me?
Yes, great.
Okay, good. First of all, thank you, Acquania, for your apparent service. I'm an Army officer myself, and about to take the Foreign Service Officer test in October to join as an entry-level FSO, because I did not pass the lateral entry pilot program that the State Department launched. But I'm excited. But my plug is really has to do with the Fannie Mae 5% loan, which I'm looking at investing, which is you can purchase a multifamily home, whether it's duplex or quadplex or triplex, with 5% down up to $1.3 million. In other words, you can occupy one or two rooms, and then you can rent out the other 2 rooms or 3 rooms. And then that way you'll have your, quadplex paid for. So the program launched, it used to be 20 to 25% down, but since November 2023, it's 5% down. So a very good opportunity. I have two single family homes in Chatham, New Jersey, in Morris County, and in New Hope, Pennsylvania, and Bucks County. But single family homes are not the best investments. So I'm looking at Fannie Mae 5%. So that's all I have. Over.
Yeah, no, that's a great, thank you for the plug. Yes, so it is, someone asked, is that house hacking? So Billy, yes, it is house hacking, but house hacking, there's different ways to do it. So yes, if you get a duplex and you live in the top and you move someone in the basement, or even a 3-plex, as long as you occupy, like he said, one of the units, you can not only leverage the other property's future rental income as money towards your down payment calculation. You can also put 5% on the table instead of the 20% that they were used to request for traditional investment properties. So it makes it more affordable for you to get in. But then you also have this passive income once you rent out the units. What I will say is, I love it if you can find it and you can do it, right? Some markets do not have as many available multi-units as people would like, because they are so popular and so profitable. So definitely give yourself extra time to find the right property. But you can also house hack in a single family. My husband and I house hacked the beginning of our marriage. When I went on a tour to Haiti, he moved in a roommate, and that roommate paid rent in the guest room. So if you are someone who is open to renting out a portion of your house, a room in your house, that is a way to make additional income and still have your home, and doesn't require you to move per se. The other thing to think about, because someone just asked that in the chat, what are some tips or recommendations on how not paying a lot of taxes for when one sells an investment property? So 1031 exchange. So if you have a property and you sell it, investment or otherwise, and then you want to avoid capital gains on it, you can spend the next 60 days looking for another real estate property, where you will generally be in charge of that property or even occupy it, and you can avoid some of the capital gains on it. And that's called a 1031 exchange. So if you do an investment, sell it, and then find another one within 60 days and use the money from your previous deal to put into that one, you would qualify for that ability to avoid in that moment. But that is just delaying the taxes. That's not eliminating the taxes. Another option, yeah, and that's the best way to avoid a lot of taxes on investments properties when they sell. What would you suggest for a couple who owns a home, has full-time jobs, for first-time income generating property or a side hustle business? So you can do a rental. I mean, that's what my husband and I did at first, if you have the income to do it. Just keep in mind, if you do the plan we suggested where you have the 5% down and you have to occupy one of the units, then you really do have to occupy one of the units. You don't want to do mortgage fraud and not occupy the unit, but then get all the benefits for as though you were. So if you're going to choose to do that, no, that might cause you to move. But you can also pull your money together and pay the traditional 20% down on a rental property that you are going to make 100% rental. And that could be a way to make passive income. And then for as far as a side business, it depends on what you're interested in. I have had a lot of people just do what they do in their 9 to 5 on the side. So if you are someone who writes grants or approves grant applications, maybe you'll be a consultant for grant applications. If you have a skill that you can do really well and someone is willing to pay you to do it outside of work, that is another way to make side hustle income. And that is side hustle income you control, because when you're a consultant, you decide who you want to work with, you decide your prices, and you decide your contracts or who you're going to do business with. So that's an option. So I tell people, take a piece of paper, write down your skills, write down your passions, and see what intersects, and try to find a business that's in the middle. My last answer to that is you can also take your savings and buy a franchise. Most people don't realize this, but franchises range in price, and some of them are really inexpensive, like less than 10,000, and some of them are more expensive, like 100,000 to $1 million. But look into franchises, because franchises have blueprints that they will give you to help you be successful. A lot of times the company already exists, so they have operating standard procedures and things and systems that you can adopt, and then you can put those in place. So I've also had people choose to do small franchises in their spare time, and that could be anything from tutoring programs to food facilities. Yes.
How does
Yes.
one go about finding these franchises? What's the
So there's different magazines, there's also websites, or you can work with a franchise broker. So I have a few friends who have just become franchise brokers, where they've gotten certification so that they can help you find a franchise that matches your values. And then they can negotiate the cost of the franchise and the franchise agreement on your behalf. So if you're interested in that, just connect with me, and then I can connect you to them. But yeah, franchise. Oh, Amina is a franchise broker, Billy. So you'll meet Amina in November if you're really interested. All right. Any other questions? These were some good questions, guys. I really appreciate it. I thank you for your time this evening to have this opportunity. Thank you for letting me lend an ear and
This
talk.
was amazing. We are at 9 o'clock on the dot. Thank you, everyone that joined. Again, this workshop will be available online. Those of you that are not members of Muslim Americans in public service, feel free to join us. It's free membership. Spread the word to other Muslims in the public service. Thank you. If you have expertise in areas and you are plugged into things that you think would be beneficial for our community, please connect directly with me. You can email provdev@mapsnational.org, and we'd be happy to organize similar or other workshops for you. And most importantly, thank you so much to our speaker, our wonderful speaker, Acquania. I've worked with her. I've done her consultations. She's wonderful. Thank you so much for your time. And we will see you all later. Thank you, everyone. Have a great night.